Okay. Any questions regarding our yesterday's write-up, what we were doing? Because I'm going to continue with that only, right? Regarding the PL balance sheet and everything. I'm just sharing my screen. Give me a moment. Okay. So yeah. So in yesterday's class, we just talked about the golden rules of the balance sheet. Also, I explained those who are from non-commerce background that it is easy that how to understand the balance sheet, right? The way we have at home our assets and liabilities, the same way the company also has, right? And that can be taken in that way. You slowly understand what is happening. Right? Now, let's talk about the double entry accounting system also. Okay, those are from non-commerce background. Double accounting account system has been introduced, and it's the main, I would system for recording all the transactions of a business. Okay. Now, what are transactions? Transactions are the day-to-day dealings what a business does. It means it's buying something, it's purchasing something, it's selling something, whatever the company is doing, all those are transactions. Since we cannot, remember all the transactions at the end of the year, we need to have something, right? The way we do at home, budget the things, and at the end we find out how much we have spent, how much is left, and XYZ. The same way the company has to do all these things because it's the company has huge transactions, right? It is difficult that all things can be remembered. That's why we note them out. And when we note them out, first of all, we write the transactions, and from there we prepare ledgers. Okay. See, there is a hierarchy like this. It's a very easy hierarchy. First, there are transactions. Then we note down in them as a journal entry. See, not possible for me to, make you understand all those things. You can just read the Google definition. Okay, will help you to understand it because all these things are part of accounting, not the investment banking and not the financial model. Okay, though they are not directly related, indirectly they are related to the financial model. Okay. Okay, so there's a transaction. First entry in the books of accounts is called the journal entry. Okay, this is journal. Okay, then from journal entry, ledger is prepared. LEDGR. Okay, after posting it to the ledger, we prepare trial balance, and then from the trial balance, we prepare three financial statements. That is your income statement, your balance sheet, okay, and then your cash flow. Okay. Majorly, if I talk about the financial statement, income statement and balance sheet is the, they both income, it's called the financial statement. Cash flow now for financial modeling, I'm including it's the one of the three important statement. If I talk at that level of financial statement, only income statement and balance sheet are the two statements we have prepared, right? Okay, now in income statement, there is a trading account also, which is prepared. The same rules are applicable for trading account, income statement, or it's called the profit and loss statement. And then here comes your balance sheet, right? Cash flow, I'm going to teach everything in detail. You need not worry because cash flow is the most important statement for preparing a financial model. Fine, let's go ahead. So this was the crux of the our accounting system. Now, see, when I talk about the double entry accounting system, number one example is when you purchase a PPNE. What is a PPNE? It's a plant, property, and equipments. So any coming category, you can mark them as a plant, property, and equipments, right? By paying rupees 10,000 cash. See over here, what's written? Cash. This means there's no banking transactions. You are giving, cash. So the PPNE on the asset side of a balance sheet increases. What they are trying to say is I'll show you that time, see, assets are here, and this is equity, this is liability, right? So whenever we buy PP with help of cash, right? So PP&E will come up over here and it will increase. At the same time, cash somewhere lies over here and cash will decrease. Okay. So because as in a balance sheet, both sides has to be balanced. The balance, the amount, both said it has to be same. So when we buy the PP&E with the help of a cash, one is increasing, one is decreasing. So there is no here one side, and both the effects increase and decrease are coming the one side also, right? Only. So that's why again it will balance. So this is the accounting system that whatever transactions you on will have two effects. Okay. Next. And cash on the other side reduces, which I already showed it to you. Guys, just a minute. I just yeah. Now, does the accounting equation balances? Fine. Let's talk about the example number 2. When you purchase a PPE worth rupees 10,000 by borrowing money, the PPE now here what you are doing? You don't have money. You have borrowed this money from XYZ, and let's see the effect. This is the balance sheet. This is assets. This is equity. This is liability. Now, what is happening over here? When you buy an PP&E, it means it's coming in your business. So PP&E increases. But at the same time, at the liability side, because you are borrowing money, right? You are right now, you are borrowing, but in future you will pay it out, right? So the PP&E on the asset side increases and the liability side goes up by 10,000 due to increase in the loan amount. So over here also, there is a loan. Okay, so this will also increase. So ultimately, if there's an increase on both the sides, again, it will balance. If it's in an increase, decrease on one side, again, it will balance. So that way, it's a double entry system. So there can be loads more examples, but these two examples will clear out the concept of balance sheet. Okay. I hope these examples are easy and clear to make you understand what is the balancing and how the double entry system works. Okay. Now, let's go ahead. So this is the assets and liabilities. So we are going to talk about all the components one by one. Number one is your current assets. Okay. Now, what are current assets? See, if you buy a machinery, is it that in a usual case, I'm saying that you will either sell it or either discard the machinery within a 1 year? Possibly no, because if you bought a heavy machinery of 1,000 crores, 2,000 crores, you have bought it for some use and you will use it for maybe 5 years, 10 years, right? So that's it. That particular machinery is going to stay in your business for more than a year. That's why it's called a fixed assets, right? Now another category is that the assets which stays in your businesses, but their balances also changes frequently. So what are those? Your cash balance. Is the cash balance remains throughout the year, and next year also it is same? It can be only possible if the company is not working. Okay, we are not talking about those kind of a companies. I'm talking in normal parlance, that cash balances changes frequently, bank balance changes frequently, receivable means debtors, they also change frequently, right? Companies buying, selling. Inventory, the goods which the company has, okay, they also change frequently. So, current assets are those assets which their balances change within the year. So whatever assets you have in that category, all will be a part of your current assets. Okay. Cash and assets that are expected to translate to cash shortly. That is shortly in the sense, usually we call it a 1 year. Okay. Inventory was there and other current assets. Okay. This is the current assets. So shortly in the sense, usually we say within a year, if something is changing, it will be categorized as current assets. Now, why it is important to categorize as current assets, current liabilities, fixed assets? Why don't we take everything in same? The reason is I think the ratios is also part of your syllabus. we are going to work on ratios. Now, there are several ratios which I'm going to talk. So for current assets, we have different ratio. For current liabilities, we have another. For fixed assets, we have another. For equity, we have a lot of ratios are there based on which a project is approved or disapproved, right? So that's why we need to be careful why doing the accounting, that which item should go under which category, right? Next, current liabilities. The way we have current assets, exactly opposite to that is your current liabilities. Opposite in the sense, they're on the opposite side of the balance sheet. Balance sheet is this, okay? Here will come up your current assets. On the top, you have fixed assets. Then comes your investment. Okay, for those are not from the, maybe for everyone, I would say, have you seen the pro forma, where you will sign this pro forma? In any listed company's balance sheet, you will find, or I said, you can download the income tax return also. If it's feasible for you all, kindly do that, okay? So there you will find out all these things written together. Okay, okay, let me just complete this and I will show you. So for future reference, you can download these things and then you can use as per your requirements. So fixed assets, investments, current assets. Then we have on the opposite side, we have current liabilities. The same concept which goes for current assets, that the same will go for current liabilities also. The only difference is of the company, they are all liabilities of the company. Payables means creditors to whom we have to pay money. Short-term debt, okay, current liabilities and etc. Right? So same way we have current assets, we have current liabilities also, which we need to pay in short time will be categorized as current liabilities. Tangible and other non-current assets. See, there are two categories of assets. One is tangible and another is non-tangible. Now, what is the difference? The word tangible means you can touch them, you can feel them. The word non-tangible means you cannot touch and feel them. In the business, there are lots and lots of tangible assets. For example, plant, property, equipment, furniture, and XYZ, right? In today's AI world, I would say the companies doesn't have you know, these kind of an assets. Okay, laptops are there. Rest all are non-tangible. Okay, they don't have a office of their own. They do not have much of them, right? Because if I talk about a VFX company, have I talked about the DG Core and Basilic Fly Studio? These are SME IPOs which have recently listed. Okay, so you can check out. Uh, if okay, let us go together and I will show you. So now these companies are all graphic based companies. Okay, they work for American industry, Indian film industry, Avatar, and a very good companies are what I would say, they have a contract for these things. Okay, if it is there, I will show you because it's just a recent one. So both the companies are VFX companies. Okay, so what do you expect? Do you expect that these companies will have machineries and everything? No, because what is there? Their softwares and everything are there. Now, how do touch the software? It's a run right in this computers or laptops. So those are categorized as non-tangible assets. Okay, and there's a depreciation also different. 25% depreciation is there on these non-tangible assets too in income tax. Fine. So coming back, tangible means land, building, equipment, furniture, fixtures. All those will be categorized as tangible. Okay. Assets that have long-term physical existence and acquisitions for running in the businesses. Then if I talk about the non-tangible one, we have goodwill, patent, trademarks, right? Intellectual property rights and all those things. Okay. So that way, others are what? Non-tangible assets. Okay, I'm going to talk about non-tangible again. Long-term liabilities. Secured loans, unsecured loans. Okay, secured means you have given something in mortgage to the bank, to the NBFC, to any other person. And housing loan is a secured loan. Why? Car loan is a secured loan because till you complete the payment, you cannot, you'll not have the papers of the car or the house, right? You must be knowing all these things. So that's called the secured loan, because something is there in front of the in against the secure against the loan. So that's called a secured loan. Unsecured loan means there's no any mortgage part or anything is there. So that's when they are called unsecured loans. So they are all liabilities, okay, long liabilities, liabilities that have that the company needs to pay in the long run, right? Investments of the other non-current assets. Okay, this I have completed. Let's talk about the intangible assets. Goodwill, brands, patents, trademarks, softwares, everything will come under the category of intangible assets. Assets, those are not physical in nature, but have a useful life greater than a 1 year is called intangible assets. Okay. Okay. I think I should change my network. Just a moment. Otherwise, again, I will have. Okay, I'm just sharing my screen. Fine. So intangible, I've already talked. Next item is our shareholders equity. Okay. Now this shareholders equity, shareholders equity, capital, stock, additional paid up capital, amount which a company is financed with, right? So all those reserves and surplus. I just write it over here. This is very important, guys. For any financial model, see, there is a capital structure. Okay. Capital. Capital structure. Now, when I talk about the capital structure, it includes equity, which I just spoke about it. Equity is there. Okay, equity includes what? Your paid up capital. Okay, this is the money the shareholders or the promoters bring in to run the business. Then additional paid up capital. When the company goes for the IPO, they get the equity only. Okay. Yeah, that's it. Capital, stock addition, and everything. Then in the capital structure, we have another component as okay, reserves and surplus are also part of your reserve and surplus. Then we have debt. So when I'm going to take you to the model, the Excel model, there I'm going to talk about this again in that parallel, okay, and we'll try to attach with the Excel model, but try to understand, guys, whenever a financial model is prepared, okay, this capital structure is very important. The point is how you want money in your business. Do you want in the form of an equity? Do you want in the form of a debt? Do you want in the form of a retained earnings? What are retained earnings? The money which is saved by the company. Okay, you are putting up a new project. Okay, and do you have the retained earnings? And then fourth limb is preference shares. So right now, please try to understand the capital structure, because I am going to use this in lot more ways. The concept is, if you are doing valuation, there's a there's some purpose. If you are going for an IPO, there's a purpose. Now, when you go for an IPO, it is absolutely clear that you want to raise money through equity. Okay, because in IPO you're going to raise money through equity only. But when you go for mergers and acquisition, or when you go for project finance, right? So that time equity will not be a part. Okay, in mergers and acquisitions, equity can be there and may not be there. But in project finance, you want debt. Okay, you are borrowing money from NBFC, banks, XYZ to finance your long term this projects. Okay, retained earning is will be there in your company. Either you can use it or you may not use it. It all depends on the circumstances to circumstances and depending on project to project. You can also issue preference shares. When you issue preference shares, you're going to get some money and that you can use in your project. Are you getting my point? So in a capital structure, there are four ways you can raise money, either through equity, either through debt, retained earnings, and preference shares. Now, it's not that either will work. Here, yeah, there can be a permutation combination. This plus this plus this plus this. You can raise all the four way. Okay. There's no, okay, definitely the paperwork and everything will get absolutely complicated. In real life, there's two components, one equity and debt. They are, most of them are taken, and also the retained earnings, right? This is also called cash. Preference shares, it is there, but nowadays, I have seen less company issues preference share because it has its own limitations. Okay, the preference shareholders cannot vote. I think then convertible will also come into picture. So again, see, if I talk about preference shares, there's a whole different chapter is there, hold on, all together. So either you can do only equity, only debt, only, or a combination of four. Okay. So, or a combination of two or a combination of three. The point is, if you want to raise 1,000 crores, if you want to raise 1,000 crores, how you're going to do that? Now, that's where the investment banker comes in. Okay, that's your role. You need to calculate, okay, and you need to prepare a report, and you need to show the sensitivity and the scenario analysis based on which the client will decide which is the cheapest way of raising things. Okay, if you raise equity, right, you need to dilute equity, and you cannot dilute more than, if you dilute more than 50%, the management will go away. So that's a risk. If you take debt, okay, then what percentage at should be yours, at what rate you should take up the debt, 10%, 15%, XYZ, right? Or a permutation or a combination of equity and debt. So there comes the role of an investment banker. Okay. As a chartered accountant, we also prepare these reports, and then we show the clients that, this is the way you can best, three or two to three scenarios we give them. And then also we tell the cost to raise these things. That if you want to raise, how much interest you have to pay, that's your cost, plus the processing charges. If you want to raise equity, IPO cost is how much, okay? There is no fixed cost when you raise, IPO, but yeah, approximately it's between almost 10 to 15% of the amount raised. Okay, because you have so many expenses, due diligence, different legal, market making, digital or marketing, etc., etc. So a lot of costs are involved, isn't it? So that way, who will pay that cost? Company is going to pay, but in front, company is getting some money. That's why they are ready to pay the cost also. So there comes the role of an investment banker. They analyze these things and tell the company that how much profit you will make once you do all these things. Okay. I hope the concept is clear. Now, this particular thing is applicable in all the things, either it's project finance, M&A, IPOs, debt restructuring, any deal you do. Okay, you need to analyze, or you want to raise capital for bigger project. You have a bigger capex, capital budgeting is there. Okay, you have a project in mind. So whatever and whenever you do, this is the base. And as a layman, you can understand these things. I'm not saying that you all are laymen, but it's a very simple concept to understand that company wants to raise money to run their projects. What are the different ways? These are the different ways. And now you have to make the proportion, okay, and the permutation and combination of these things. Okay, I hope my message is absolutely clear. Okay, now this is nothing. These things are not written in books. If they are written also, they are written in a very complicated way. I just try to break down and bring it to a simple point. Okay, let's talk about this. Before going to a cash flow, I will show you one of the balance sheets. Okay, let's Basilic Fly Studio. I'm not sure. It's just listed. I just see whether it is the website is there. It'll be, it's I have the YouTube videos and everything also. Yes, it is there. I just show you. It's an interesting one. You will find it interesting. Okay. Nevertheless, it's just a recent one. Okay. Because I have the videos and everything. Okay. I didn't visit the website. So this is a Basilic Fly Studio. They have worked on these movies about, see, leading studio built on the teamwork of diversify, creating and bringing minds and everything. See the Apple TV, Marvel, these are the companies and the services they provide. What I said, they don't have much fixed. We'll look at the balance sheets also. I want to show you the balance sheet for sure. Match, move, paint. I'm not aware of this industry, guys. Okay, if you are aware, see latest projects delivering outstanding results. These are the latest project. Few movies I have seen, much I have not seen. Avatar, I think most of us have seen. Okay, now he's the man. She's the lady. They have seen that interview also. Okay, South Indian guys. See, I think she's a South Indian heroine, if I'm not wrong. I don't know the name. Okay, Sunil Shetty, you all know, not to mention. They have offices in Chennai, Pune, North America. I said na Vancouver also. This is Canada, London, and they are also working in America. Okay. So if you want to download anything now, go to the investors corner, work, blog, everything is there. You check it out. I think in media coverage, you will find out yeah, sure. I think Hemant, you will get everything, huh? Just close this window. You can ask the team. Okay. Let's close this also. Where I was. Okay. Just a second. Media coverage, you may find out the YouTube video. Okay, it has taken me to another. Yes. All these things I have also seen. 66 crores IPO was there. I already said, right? Okay. Media is not there. It's okay. Leave it. Let's go back. You all can see my screen. Can anyone just write in the chat box? Because I'm going to download. I want to show you if it is there. If it is not there, I will. You all can see in the investor corner. Is it visible? Yes. Thank you. See, go to investors corner. Let's go down. Okay. See, average restated financial statement 20 to 23 restated means they are filed and again, see, it's a very recent IPO. Okay. So I will also learn with you all because, things are so dynamic. Okay. See, this is COP. It's a very recent one, guys. Only see the ticket size is only and only 66 crores, a very small amount. Like quarterly financial results, previous year's financials, half year financials. Okay. They have to give it. Okay. Corporate governance, CSR policy, dividend distribution, why whistleblower policy, materiality, and here it is, red herring prospectus. This is a draft one. Whenever a company goes for an IPO, before the IPO comes, they have to prepare a website. If it is there, they're better. Then under the investors corner, they have to write everything. Okay. See, everything is there. It's easy for you. This is a very small company. First of all, I'm saying it's only 66 crores and just floated recently in September. So these things are very small. If you want any help, you can take it from here because here now the things will not get complicated. But if you download a Infosys one, you will find it like an ocean. No, loads and loads of things are there, right? Because it's a very old company, 40 years, more than 40 years company. So you can understand the size. So, it's now every time, guys, please remember, uh, search for the water as per your requirement. In the sense, if you are very thirsty and if you require loads of data, go for a older company. But if you want only a bit of information, go for a newer company. Are you getting my point? If you do the vice versa, you will get stuck. It's fine. Red herring prospectus annual report. I'm going to download that and I'll show you. Information on shareholders and Here the information will be so easy. You will understand everything. Very and see material art. These documents need to be filed. Underwriting agreement, NSDSL, CDSL. You can see all have to be here. Okay, more are there. Okay, let's just go to the annual report. This is only one annual report. Why? They have just got floated. Okay, now it's a 100-page annual report, right? Okay, so why don't you do one thing? In the meantime, I give you time. 1 minute I need. Okay, you all can just go and download it in your okay, and then we'll see to it. What is it? I just wanted to show you the what we say PL balance sheet. Okay. So what you can do is, and it will be easy for you guys. Otherwise, if I will take one more, the established one only. See, it's very, very easy. Okay, fine. You can download it. I showed you the way I have downloaded this. Now, every company get downloaded. Revenue from operations, other income. Total revenue, you can see it's in what? It's in lakhs. Okay. So you can just check out the figures 21, 22. Always look for the consolidated one. Standalone means it's only for one particular its venture, but consolidated means it combine all its companies. Okay, so prefer always the consolidated one. Total revenue. See, these are the expenses. I have already talked with you all. Remember, in the PL way, all expenses got out, full expenses, then taxes. I'm not going to analyze these things right now. We can do it. Current tax, deferred tax, profit after tax is this much. Okay, 2790. Basic and diluted earning, EPS, earnings per share. This is also very important. This is, you can see, there's no much difference because this is a very new company. Okay. Then these things you can read. Only one thing I want to highlight. It's a VFX industry company. And there is a report also. I don't know that ENY also has a report on this VFX because that's it's going to generate how much crores of employment and all these things. Okay. We know the OTT platform, Netflix, what they are doing. It's all there, right? So that was the income statement. The same way balance sheet will also come. Name of the directors and everything. This is all part of companies. When you open a company, these things have to be there. I took this because it's a very small one. You can read these things. I'm not going to talk about these things. Not at all. They are the auditors. I'm just looking for the balance sheet. I hope it's not gone up. Okay, see, information about holding subsidiary in JVs. So they have two subsidiaries in Canada. One is there and one is in UK, right? So okay, here is fine again. Okay, now fine. This is the summarized part of that income statement. This is what we have done. Where's the balance sheet? You can find out the directors and everything, CFO, CEO. You can just go through, guys. This is sometimes I take this detail in your stock market. Very weird. I'm not finding the balance sheet where it has gone. If I don't find it over here, this is the audit report, which they have just stick over here. Okay, okay, okay. Comes. See, very good. See, this is the balance sheet. Okay. Formerly, this company was a private limited company and then it shifted to a public limited company. Okay. Now, see over here, equity and share capital. I talked about this. Then we have the shareholders fund. In shareholders fund, what we have? Share capital, are reserves and surplus, money received against share warranties. Nothing like that. It's a format, okay? So if it's not there, still it's okay. Monetary interest is there. Okay. Share application money pending allotment. No. Before for IPO also, money used to come in installments. When we used to study paid, pending and all those things, paid up, half paid up. So now those concepts are gone. Okay, let's not talk about that. You can ask your parents if they know, they will tell you. Then we have non-current liabilities, non-current long-term borrowings, deferred tax, other non-long-term liabilities, long-term provisions. Okay. Then we have current liabilities, short-term trade payables. I've already said all these things. Other current liabilities, short-term provisions. Okay. So what is this? This is the part of equity plus your liabilities, right? Okay. Then this is the assets, right? Non-current assets, PP&E, intangible assets, PP&E, intangible assets. You can find it everything. If you want to look at the details, you will find it over here in note number 10. I will show you that also. Non-current investments, deferred tax assets, long-term loans and advances, other non-current assets. Under the category of current assets, investments, inventories, debtors, cash and bank, short-term loans, other current. Okay. If you are new and you do not understand these things, this is the best thing you can go. If I show you a listed company which is established, I have a lot and you can also download a lot. That will be a very, for first timers, it will be difficult to understand those things. And if you know, definitely there is, I said now, 8,000 companies are listed on the stock exchange. You can go and download whatever you want, right? But as a study, this is for the beginning. And once we complete this, I'm going to show you the limited one also. Why? Because, yeah, screener also you can use. They will also give you the audit report, anything. Absolutely. In fact, a screener, they don't give much information, okay? If you use a paid version, it is good, better. And otherwise, money control also, they, with a paid version, they give a lot of information, isn't it? But now I just give you one more idea over here. Idea in the sense, a very, if you are preparing a financial model, kindly do not use the data of the screener money control. Go to the website, download from there. Why? I tell you, because in previous days I have worked for screener with my students, there was a data mismatch. Okay. Point also, if it is instead of 59, because the screeners and money controls, they use whom, the typist, which whom they pay per hour per letter. So if there are loads and loads of chances that there can be an error. So for better preparation of your financial model, kindly go to the company, download from there, and then start your working. Now, why you want to take risk? Okay. And the information which you will get in a company's annual report, okay, from the company's website may not be there in the money control. If something is different, then how you're going to justify this? Okay. The client will ask you, why didn't you go and from there and why did you download? Okay. So if you have downloaded from there, then you can 100% confidently, you can say that I had downloaded from the company's website. If it is like this, I don't know. Okay. Or money control is having a issues. So this is my humble request. I do that way. And kindly download from the source, not from the other, different platforms. Okay. So cash and bank, short term, long term. This is a very small balance sheet. It's absolutely, it looks like, pleasure to read all these things. We also prepared this way only. And this is a consolidated profit and loss statement for the year. This. We have already talked about this, guys. For private limited company, we prepare like this. Okay. Okay. Then I think cash flow is there. Yes, cash flow is also there. But since I have not talked, I will not talk about it more. We'll come back. We'll come back. Okay. Anything else I want to show you over here? Not right now. Okay. So actually, I was going to show you something. I forgot. What was it? What was it? Okay, fine. Nevertheless, see, these are the details. Okay. Uh, 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 just a second. See, whatever, note number 7, trade payables. I'm just showing you the starting point. Sorry, just a second. See, notes to consolidate financial balance sheet, note number 1, share capital. Now, whatever you need to know about the points were written, note number 1, 2, 3, 4, 5. So all the details are here. Note number 10, PP&E, okay, which is separately attached because of the depreciation sheet. They must have attached separately. Uh, no, 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 okay, let me see if I can find that. Since it's a pasted part, I cannot do Control F. But I just wanted to show that these companies, they don't have much fixed assets. That's why no 50, see, only 56 lakhs of this depreciation. So then banks are very, is it? Yes, yes, yes. See, what are they? Okay. It's not happening now. Oh, sorry. Wait, just a minute. I have to be okay. Is it the screen visible? Is it it's going straight? Can anyone just tell me? Can you see the depreciation part? Can anyone just write in the chat box? Is it that what I can see, you all can see? The depreciation PPNE. Okay, okay, okay. Thank you. Fine. See, computer and accessories. For 1,10,000, they have this only. Furniture and fixtures of only 21 lakhs. Office equipments, this less. You can see computer and accessories, they have highest. Why? Because they are a VFX company, right? Thank you. So that's the point. Otherwise, a different company would be there. Now they will have heavy machineries and everything. Vehicles, they have 100 lakhs. Okay. Now why they have, I don't know. That need to be carried out. Maybe in a, countries like UK and everything they require. I don't know, this vehicles can be different things. Huh? Vehicles over here, they may need some gadgets and everything, okay? Portable, which can travel because they are into animations, fine. So that can be a different thing. Printers and scanners and plant and machinery is only 27 lakhs. The computer and accessories, they are the major part, okay? Okay, and so depreciation is also higher on them, and the rest is very low, right? I just wanted to show all this thing. No, no. See, when a company goes for a listing partner, they have to be very careful, right? That is, that can be tolerable in the private companies. Okay, I worked for one of the project. You know what was the asset in that company? Only Mercedes was there, and that company wants the loan, based on yeah. Okay, so that is possible usually in the private sector, but not in the public sector, guys. NSE and BSE are very stringent, and they want to save the money of the investors. Okay, so do not. These things are not possible. Nevertheless, we'll talk about the cash flow now. See, cash flow is the backbone of preparing a financial statement. You must have done at any of the levels, if it is if at all you have done. If not, then but I'm going to take you in a different ride, because the cash flow which we learn at our 11th 12th grades or BCom level or BBA level, whatever, it is different over here, right? Because we need to collaborate, and we need to attach it with the balance sheet and PL. Plus, this is the cash flow will always be same, but the way, as I said in the previous class also, the way we have to look at it will be different. Nothing else. Okay. I just get my water. Just jump. Okay. Now, so CFS, okay, this cash flow statement. Can anyone tell me, have you ever heard about it, or have you look at it? Anything you know about the CFS? Anything? Anything you know about the CFS? Have you done it before? Yes. Okay, great. Anyone else? Okay. Nevertheless, I'm going to start from scratch only, because I don't want any confusion regarding the CFS, because at the college level and everything, we don't take CFS so so deeply. Why? Because it's not required. Much of the financial statement, they don't know what is a CFS. Okay, they don't require it. But for preparing a financial model, this is the backbone, right? If you don't know how to prepare a correct CFS, first of all, what will happen? In few companies, you will get the CFS the way it was prepared, right? So you do need not work upon it. But if you don't have the knowledge, if there is an error in the CFS only, you will not be able to find it out, and your whole projections will go here and there. So, being an investment banker, I don't think so you can leave any stone unturned. Why? Because you should know each and everything, and that also by heart. So that whatever you are learning over here, kindly practice those things. Find out more material. I prefer offline. It's up to you, online, offline, you want it. So dig into it, dig into it, dig into it. That's the way you can sharpen your skills. Let's talk about this CFS. It's nothing but a statement. Why? Because as I have said in the PL, we prepare in accrual basis, okay, which doesn't give us a full information. So the CFS is only and only, it's a matter of cash over here. It's talk about nothing but the cash inflow and cash outflow. If it is not now cash and bank doesn't means only cash. Cash means liquid money which we are using. But if it is not bothered about cash, it will not be part of a CFS statement. Okay. Offline resources, kindly issue magazines, kindly read the newspaper. My mentor always say read the newspaper properly, not the gossip and the the entertainment news. No, the real news, the economy news. Okay, so newspaper are a very good source of information. You will find a lot of things, and initially you'll find it's boring, but then when you get used to it, you'll find so many information is there, right? Or you can have a weekly magazine or monthly magazine coming to you, right? So that way, and books are there. Read more and more books, right? I also do these things. Okay, that's why I'm saying. Okay, so if I talk about cash, it is only about inflow of cash and outflow. If any material, if any transaction is there where cash is not involved, will not be a part of the your cash flow. Okay, that those are called non-cash transaction, and they won't be a part of cash flow. Okay, they will be there in PL balance sheet. In fact, we are going to extract things from PL balance sheet only. Okay, we are not going to prepare something very new, but what should be included, that we should know. Fine, let's go ahead. While the income statement accounts for the transactions run by the company, irrespective of the cash movement, the cash flow CFS gives us an account of the cash flows into and out of the company over a period of time. The CFS shows how the net income and changes in balance sheet items have an effect on the company's cash balance. In general terms, it provides an insight of the short-term viability of a business and its ability to fulfill its debt. What is the short-term viability? That do the company have sufficient amount of cash to run its operations on day-to-day basis? That's called a short-term viability of a business and its abilities to fulfill its debt. If the company has taken any debt, is the company capable enough to fulfill the interest plus the principal? It excludes what? Any non-cash item. What is a non-cash item? Depreciation is one of the non-cash items. You will always and always add that item to the net profit. Why? I will tell you that also. But remember one thing, depreciation is a non-cash item. Can anyone would like to say why depreciation is a non-cash item? Have you think of it? Have you heard it about it? Today I'm going to say, and a lifetime you're going to remember these things. Okay, so anyone knows it would like to share your insight over this with other students over here. Anyone knows? First of all, that's a question. If anyone is not telling me that why the depreciation is a non-cash item, only depreciation. There are others also, guys, but depreciation is such a item which you will always and always add to the net profit because it is not a part of your cash flow. Okay, now why I will tell you that also. If anyone would like to do it, voluntary, wherein good, you'll always gain when you speak something, right? It's up to you. Otherwise, I'm there to make you understand. So to understand which areas of the business are generating cash, depreciation, okay. which allows us to understand. Okay, someone is there. Yeah, this is it. Absolutely. Shresht is right because it does not result in cash outflow. And I will tell you why also. Just you are right only. I will just add one or two lines to that. Come to this. Just let me complete this. So which allows us to understand which areas of the business are generating cash. Fine. Okay. This is it. Then three sections I'm going to talk. Now see, what is depreciation? The moment we bring in any PP&E, right? Plant, property, equipment. What happens? If today we have bought a laptop, season is on, sale is there on all the platforms. If you want to buy gadgets, I think near Diwali, we buy gadgets and everything. Let's say we are purchasing a laptop. So I have purchased a laptop worth rupees 60,000. If I go for Apple, it can cost 1 lakh also, right? So the moment I have bought it, it was 60,000. The moment it has reached my house, I've opened it, I've installed it, I've put my email ID credentials, and I'm then using it. The next day, if I go to the market, want to sell it, at what cost it will be sold? Is it that 60,000 people will give me? No. Why? Because now it's a second hand. One day also, if you use, it's a second hand laptop. What has happened in this one day or maybe years when we use? The things get depreciated. The assets get depreciated, right? If you bring a car, is it the car, the moment we bring the new car, it's the way the engine works, okay? Is it that the car will run the same after 10 years? Maybe mileage will get affected or something. But I'm a very good driver, I would say. And if you are also driving your car, maintain your car in a such a way that it sustains for long, right? It depend on drivers to drivers, okay? So whatever, if I use it properly also, now after 10 years, no one is going to pay me the same price at which I have bought, right? So now what is happening? Wear and tear, which is very essential part of our assets. And that's why government said, okay, we understand the moment you bought, you will use the asset, it will get used, and the prices of that assets will go down. So how to calculate those things? The government has given us the rate of depreciation, rate of depreciation for all the categories of assets. And every year we provide depreciation on assets, right? So that the value of that assets is reduced in our books of accounts, right? So as a result, the real cost of an asset is shown in the books of accounts. Okay. So that is the point. Okay, guys, I will just take 5 minutes and I will complete this and we'll end the class. Only 5 minutes. So this rate of depreciation we are charging in the books of accounts, but originally we are not paying out any cash. Aren't we paying? Like we are not paying, only to maintain the assets value. Okay. If we maintain, if I have bought a Mercedes of 30 lakhs, right? So if I keep on showing this 30 lakhs in my assets after 10 years also, but the value of the Mercedes have already gone down. Okay. So this is not a right practice. It means you are showing the assets at a higher value. It will be a wrong presentation, right? So what to do this? That's why we charge depreciation every year. And now this rate of depreciation which we charge, I was absent last class. So what topic was discussed yesterday? Can you please tell? I discussed income statement and balance sheet only. Okay. Income statement I discussed yesterday. Financial model I started. And income statement I discussed, right? Fine. So the value of the Mercedes is not right, but I'm not paying anything to reduce the value. It's just a customary practice. That's why it's a rule for the income tax and companies act. That's why I'm doing. So that's the reason the depreciation which we charge, which is there in our profit and loss account, is not the actual money which is going out. That's the reason when we prepare the cash flow, we'll add back depreciation to the profit to bring the profit to the proper level. Okay, this is the story. The same way, if you have any other expenses which you have charged in the profit and loss account, but they are not actually charged, the money is not going out. Same way you will add in the cash flow that is. Okay, so once we adjust the net profit, and then we'll start the activity of the cash flow. So that is the story of the depreciation and the cash flow. Okay, So what we can do is, okay, 2 minutes and only 3 minutes are there. If I want to show you, just what is this? Okay, this I will take it. Okay, now we are meeting, I think on Friday, right? Okay, we have 2 classes only. Nevertheless, if in the meantime, if you all can read about the cash flow, kindly read it. Three components are there of cash flow, which are your operating activities, then your then your investing activities, and then financing activities. Okay, activities. You all can just Google it out, just read them. So it will be easy for you to connect in the next class. Okay, and what are the components, why they are like that, and everything I'm going to explain in the class itself. Okay. Land and gold. Yes. See, appreciation is different. Okay. If we bring land now, land we do not depreciate. It is not compulsory to put depreciation on land, first of all. So most of the time, if you see in the balance sheet, land is there now, no depreciation is provided. It will stand as it is. When you will sell this land, at that time valuation will be carried out, and then again, calculation will be done as per the income tax rule, and accordingly you have to pay this tax. I'm taking your questions one by one, right? And gold. See, gold also, if you have bought, okay, it will be as it is in your books of accounts. When you will go for the selling partner, at that time you have to do valuation of the gold, and then accordingly, you will be charged for tax, right? Fine. Then, ma'am, investment activities must always be negative. No, 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 no. Never, never, never. Why always be negative? Don't you get this if you have invested some money, you must be getting some interest on it, na? You will earn interest. Why it will be always negative? No, there's no concept of always. It can be negative. This is a very personal question, right? See, now there's no exact answer for this. Okay, which type of finance research should I do for building resume? Research project, now for which company you are going now, go to their website, see what their work is there, okay, and accordingly you take your call. Otherwise, right? So that way you can proceed. Okay, fine. I hope the next class is there. So let's hold on here only, and we'll meet in the next class, maybe probably on Friday, Saturday. Okay. Okay. So thank you and bye bye. Meet you in the next class. Bye bye. Yeah, we'll take all the questions next class because we have a recurring class. I cannot take much time. Okay. We'll take up everything in the next class. Thank you. Bye bye.